Screenshot.
Okay, tell me what it is. Tell me what it is.
You asked Siri, what are you wearing? And Siri responded back. She said, you have the wrong personal assistant, Jeff.
That's awesome.
Peter Saddington, your big game hunter. And guys, we have our sights on someone special today. Only a mother could invest in this idea.
Made this like super artistic.
That is actually absolutely correct. And that's a very, very astute assessment, actually.
Welcome, everybody, to another edition of VC Hunting with me, your host, Peter Saddington. We are here to find the untold stories of venture capital and entrepreneurs, and so that you can know the money. We have today with us Jeff HAYNIE, the CEO and co-founder of PINPOINT. Jeff, thanks so much for joining the show.
Hi, happy to be here.
Well, we have to do a couple of little caveats here. Jeff HAYNIE has invested in my company, and I have invested in Jeff's company, PINPOINT. So we'll leave that there. But let's just jump right into my first question. We're talking about venture capital. Tell me, what was your foray? What was your entrance into venture capital, and why was venture capital something, out of all the things that you've done and being a founder, entrepreneur, venture capital is something that you also entertained as well?
So probably my lens of VC is really as an entrepreneur and founder. And I sort of came into this world. I'll sort of maybe give you my background, a little bit of the story, a little bit about how I found my way into venture capital startups, which was back in the mid 90s. So a little bit dates me a little bit, but we go back into a time before the dot-com, or I should say as part of the dot-com thing of the early late 90s, early 2000, and I had my own company in the 90s doing software development, kind of bespoke software development in Atlanta, Georgia, where you're at, which is where I grew up. And yes, to the ATL peeps. Yeah. So exactly. I had a kind of bespoke software development organization, and we were building software projects for commercial companies. I didn't know anything about venture capital, and I got introduced to a couple of founders that were starting a company, and they weren't super technical, and they approached me through a mutual friend that I'd done work with, about helping them build a software product. And this was pretty typical. I got hired by companies to help them build software. And I got paid for it. There were no such thing as stock options, and I didn't know anything about anything like that. And these two guys were really smart, really sharp guys, and they had a really interesting idea. And they told me about their idea, and they told me how they wanted to build the product, and if I could help them build it. And I basically proceeded to tell them no, I could not help them build it, and they wanted to know why. And I said, because what you're trying to do cannot technically be done.
Ooh. They must have respected you even more for saying that.
Yeah, exactly. So I said, I can't take your money because what you're trying to do and how you're trying to do it won't work. And so they said, well, then could you, tell us how to make it work? And so long story short, I helped them basically end up building some software, which then they turned around and raised money, which I didn't even know what that meant at the time. And so they paid me, hired my company. I helped them build the software, helped them write for the early version of the patent. And they went on sort of to build a pretty decent sized company, take it public, and make a bunch of money. On that journey, probably a year into this sort of contract relationship I had with them, because I just, I was getting paid in the green dollars,
right, for sure.
Not the VC dollars. And so I helped them build this company, and sort of about a year in, they sort of approached me and said, what if you come work for us? And we give you stock options, and you bring your team, and sort of basically an acqui-hire. Okay. And we really are trying to build out, we sort of raised a bunch of money. We're going to go big, and we really want to sort of hire you to help us, and you come be the CTO, and we'll hire your team and all that. Today, we would call that an acqui-hire. I didn't know what any of that meant, of course. And I said, that sounds interesting. Like, what would the offer be? And they basically said, stock options. We'll give you stock in the company. We'll give you a salary of $80,000 a year. Which at the time was laughable, because I was making a lot more money, running my own company. And I laughed him out the room and said, "This is just, why would I ever do this? This is a terrible, terrible idea." The moral of the story is they went public. That would have been that would have made a lot more money. And and that was back in the day when they went public, and they actually made some decent money before the dot-com crash happened. And so I kept up with these
kind of
guys.
like a trial by fire, right? It's like
Yeah.
did they spend time teaching you about it, or they kind of expect?
I didn't know anything about it. I thought they were insane. I was like, why would I come work? I was making a lot more money. I was like, why would I come work? And why would anybody want to come work for $80,000 in some piece of paper that says you're going to promise to pay me a bunch of money in the future when I have, sort of present money value?
For sure.
And I just thought it was the weirdest thing in the world. I didn't understand the whole idea of raising money. I didn't know what they meant by that. And so, of course, fast forward a few years, they made a ton of money. I kept being friends with them. I stopped, of course, they proceeded to hire someone else to kind of run the thing. They did end up hiring a CTO and a management team and build an engineering team. And over time, we didn't do as much work with them, obviously, as they brought this in-house. But we maintained friends and are to this day. They went on to, like I said, IPO and do pretty well for themselves and for the people that did come onto the team. And so then fast forward in about 1999, the same guy asked me after they went public, and they ended up selling after they went public to another large company. He approached me and said, hey, I'm thinking about starting another company, and I'd like you to see if you'd be interested. And this time around, I was like, I have no idea what the heck this guy's doing, but I'm going to definitely follow him. And I would like to be part of what he's building. And he said, I've got this guy I've met named Bill Gross, which is a famous sort of investor in startups, especially during that time period. And he said, he's got this thing called Idea Lab. And so I'd like you to I met this guy, he's really interesting. I want to raise some money and start this company. And so I'd like you to be involved with it. And so I joined him. We started this company called eHatchery back in Atlanta. It was kind of an early Y Combinator, if you will, back in 1999. We raised, a decent amount of money and built that out. And so that was sort of my first foray. I would say he sort of taught me what sort of the whole idea of venture capital, startup capital, what it meant to sort of create a company, kind of accelerated growth. I'd been an entrepreneur where if I didn't, it was all cash flow. I mean, I was bootstrapping. Sure. I didn't know what that meant. And so that was sort of the first, area. I started meeting a lot of the investors, and sort of he taught me a lot about just how to build a company, how to raise money, how to talk to investors and things like that. He was an amazing entrepreneur.
That really is a unique story, Jeff. And the reason is because these days you don't generally hear of individuals knowing almost nothing about venture capital before going into these types of scenarios and offer opportunities with VCs and accelerators as an entrepreneur and founder. And so it's unique in that you really went through it through fire, and you said, hey, I don't know what this is. This guy's going to lead me. He did a great job. And then he came back to you and said, hey, I have another great idea. And you were like, well, 1999, it's time to make some more money. This guy's obviously done it before. And you got into it that way. And so it's fascinating that you learned through kind of just experience and just kind of drinking through the fire hydrant. Did that excite you? Did that excite you about the venture capital world? It's like, hey, I could be a founder and create stuff, or I could be on the financing side. Well, was it exciting to you that venture capital was a whole new world to you that you wanted to get into? Or did you really kind of just poo-poo and say, hey, it's a great mechanism for financing me, but me personally getting to VC, really not my thing? Where did you really kind of fall in that?
Well, in the first few years, I didn't fully understand it because I wasn't doing sort of fundraising personally myself. So I got a lot of exposure to it without actually having to do it myself. And it seemed, just seemed very mysterious. So I learned a lot about it. I learned a lot about fundraising and the process of being on a board and having investors and all that, but more as a participant.
Right.
And my next company that we ended up sort of taking some money out of that company, and I started another company, which I was the sort of founder of. I brought another co-founder on who knew a lot about, again, he was involved in this other deal that we had done. And so he had sold a successful business, had made money, and he was an angel investor. And so I brought him on to sort of be the CEO. I still didn't feel like I knew how to be CEO of a venture-backed startup. I mean, I'd been a CEO of a small company before. So I still felt a little bit like I need this guy's help because he went to Stanford and he knew everybody and he had a successful business and sold it. And so I asked him to be sort of my CEO and co-founder after I had started this company and
Wow.
raised a little bit of money.
So if you were to look back at your experience of learning about venture capital come from an entrepreneurship founder's perspective, what would have helped? What would have you have done differently now? I mean, all the past sins are forgiven and all the water's under the bridge now, all the drinking from the fire hydrant that you had to do, and on probably the 20-hour days learning all of this. But what do you think would have helped, and what would you change if you were to go back to that mid 90s Jeff Haney and say, hey, you're ill prepared for this venture capital world. You're ill prepared for leading
Well, I
companies.
think today it's amazing because, like you mentioned it earlier, I mean, today, like the whole idea of starting a company, raising money, how do you do that? How do you meet people? How do you pitch? How do you go to startup school? How do Y Combinator?
So many
All
resources.
those things just didn't exist. That was sort of one of the businesses we created in the late 90s, to try to do that. We were early pioneer in that with a number of other people. But people didn't know how to do it. I mean, there was no, colleges now even teach entrepreneurial school and how to start companies and how to raise capital and things like that. We just didn't have that. We didn't have podcasts like yours. I mean, people openly, honestly talking about it. There weren't sort of these big, founder networks of founders giving back and helping other founders start companies, and not only just writing checks, but also spending sort of sweat equity and time with them to really talk to them and help them. And so, I don't know that I could have done anything personally different, because I think the sort of the market has matured. We've normalized, if you will, how to build great companies. We've learned a lot, especially the software side of how to build companies. We've learned about how do you put companies together? How do you create financing docs? I mean, I grew up in the days when in those days, a Series A, there weren't such thing as a seed series. The first checks were maybe $50,000 or $100,000 in what we would call angel rounds, or just we didn't call them rounds; they were just angel investments.
Right.
My first check in my first company was a $100,000 angel check from a very prominent angel investor in Atlanta, and that was big. I mean, that was a big deal, and that allowed us to sort of start the company. And our Series A, I believe, was $2 or $3 million. Right, that was a fairly normal and large Series A at that time. Obviously today, that's sort of seed rounds or even pre-seed rounds these days. So certainly the economics have changed, but we didn't know how to do board meetings. We didn't know how to do a lot of this stuff. It was so early. So, obviously venture capital had been around a lot longer, but there's just very few people had sort of gone through that, experience. And so there weren't a lot of people who had done it, and there wasn't a mechanism and a medium for people to talk and share. There wasn't blogging wasn't even a thing. The internet was barely a thing. Right. And so a lot has happened.
How did you make money without the internet back then?
I know. How do you make money without the internet?
I have no idea. So before we pivot into what you're doing now, I did a little bit of research, because at VC Hunting we dig into the game. And on September 13th, 2016, so we're going about three years back, September 13th, 2016, the context was around Appcelerator. So Appcelerator was another company that you created and you built and you had acquired. And the context was how you built it, how you built Appcelerator, and how you succeeded. And you in this article, are quote here, you said, the reason why we succeeded is, quote, passionate people working towards a common goal create magic. Now, you say it doesn't guarantee success, but it does tilt it in your favor. So I have two questions. Number one, do you still believe passionate people working towards a common goal create magic? Yes or no?
Yeah,
and number
absolutely.
number two then, have you figured out what the magic was? What was the magic? That's what I'm curious.
In retrospect, right? Hey man, in rearview mirror, everything's yeah, exactly. Everything's pretty clear. Yeah, I mean, I think there is a little bit. I don't. This is just my own opinions, clearly, but I do think there's something super magical about when you get people that have this sort of idea and passion about something. And this doesn't just mean business. I mean, you can see it in nonprofits. You can see it in a lot of things in our society, but political, et cetera. I mean, so I think that, when you get, it's something magical happens when you get a lot of, especially diverse people with lots of different ideas, but come together in this sort of passionate idea that you can sort of kind of organize around something that's bigger than yourself.
Right.
And you can create this magical opportunity,
So
whether that's a political campaign, whether that's a nonprofit where you're going to save something,
right.
or, clearly a business where you're going to go do something interesting.
Absolutely. And the next question, the follow-up is not going to be, I hate asking these questions, but I know that you're going to be able to answer it. It's how do you find those people? How do you filter those people that have all the opportunities, all the network that you have? Obviously, you've already given us a little bit of taste of that earlier when you talked about people in your network that you've worked with before. Obviously, I know at your current endeavor, Pinpoint, you're working with someone who, Nolan, that you've worked with before. So that's an
Right.
easy answer. But how would you say that you yourself personally filter out and find those individuals that can align themselves to your vision? Because you're usually the guiding star.
Right. That's a good question. And I actually think it probably the best sometimes certainly your network is certainly helpful,
Mhm.
and especially as a way to bootstrap. I think that can be dangerous to rely only solely on your network. I think obviously, so I would say the way I've done it is I think I try to be very clear about what I'm trying to do and what I think
Mm,
is super important. I try to, we've always, I think, done a pretty good job of thinking about our value system and try to communicate those values to anybody either it's
mm,
here, in the existing company, and clearly the people that are trying to get over the hurdle or over the filter to get into the company. And I think if you can sort of be true to those values, what those values are, and the values ultimately are. I always like to tell people the values are simply not things that you write on the wall. They're actually the belief system of the founders. That's really that's all they are at the end of the day. I mean, you can write all kinds of interesting things on the wall and come up with all these pithy sort of sayings, but it's really ultimately a reflection of what the founders believe, um, and what they live every day. And then those are your values, and then that's what you will attract or detract people based on those. So if you know what they are, number one, and then you can articulate and talk about what they are, and then of course you have to live by them, because it doesn't matter if you say one thing and do something different. What you do is your values. And then
absolutely.
I think ultimately that becomes the if you will, the framework, I think, for then how you evaluate people. It's not always possible to evaluate those people
For sure.
before they arrive in your company. I mean, clearly you do all kinds of things to try to sort of figure that out. And then sort of, but in some, but probably for me, the most important thing is once they get inside your company, you sort of have to really be rigorous about, do people sort of fit into that? Sort of over time, as you sort of get to know people, do they live those values? Believe those values? The values aren't something that you can just show up to work and put your values on for the day, and then you go home and you live different
Mm,
values. You live those values whether in and outside of your work, because really the company's culture is the people. It's the embodiment of the founders plus the people inside the company. Um, and ultimately the customers, your constituents, your partners, your VCs, everybody ultimately, will reflect on the company values, as who what you do and say and live every day. And
this is
so to me, that's sort of like it's hard to answer the question specifically, because everybody's going to have sort of different things that matter to them, and that's what their values are. But I think for us, it's like we've always tried to sort of say, like, we believe this. It may not be right or wrong, because they're not necessarily right or wrong. They're
right,
just,
right,
here's
right.
what we believe, here's the vision, here's where we're going, here's what we believe the world, here's what we believe is wrong with the world that we have a responsibility to correct.
Awesome.
Um,
That's
and
awesome, man.
then and then when we're inside of this, we always just sort of think as execution mode, we're sort of rigorous about, people, do they sort of meet and line up with that. Skills are, easy to interview for, generally, right? Easy to hire, easy to interview for, but values are things that you just live by them every day. And
That's
so,
There's so much there, Jeff. There's so much there. I wrote a ton of notes down here, and there's so much that I want to unpack, but I do want to give you some real credit, because I love the fact that you immediately moved to this value idea, or making sure that we make decisions through the filter of values.
right.
And this is something that I know, having, you invested in our company, that this is a trickle down effect from your leadership into our leadership, and that
Yeah.
we as a company want to be value driven. But one of the things that I love that you said, and I'm going to repeat it here, is that you said values are a belief system of the founders. And your belief system, it doesn't matter what it is. It could be wrong in one context, right in another context. But I think it's so important to be able to communicate and be transparent and clear about what your, as a leader, as the guiding light, what your belief system really is. And so here's the question one question that I want to ask, and this is going to help lead us into what you're doing right now. What's one of the most prominent and most important values at Pinpoint, and why is it so important for the success and the future success of the current company that you're working with today?
Yeah, so one of the things that was a bunch, but I'll give you, and there, you know, we always like, yeah, we always like to. I'm not sure how juicy it is because it's not super controversial, but you know, it's sort of like. You know, because they're, you know, I'm not super controversial person necessarily, but I think one of the things that we really we try to sort of live by, and a few of these sort of all kind of come together, but we really try to live by humility, and the way that comes out is that we don't know what we don't know. We have a vision. We're going to make a lot of mistakes trying to get towards that vision. It's a big, audacious, you know, change the world sort of idea. But if we knew all the answers, we wouldn't be doing what we're doing, right? You know, and we're charting a path towards something. So why humbleness is important, or humility is important, is because you have to recognize that you're going to do a lot of things that aren't going to work. You're going to take a lot of risk. You're going to ask people to do things that maybe they don't even know how to do, or they're going to fail at it multiple times, but you still have to sort of get up, shake yourself off, and do it again. And you have to give people the sort of creativity and the sort of boundaries to be able to make educated sort of risk. But it also, you know, sort of recognizes that we don't necessarily know, and that's okay. It's okay to say, I don't know how to do this, but we're going to try. Awesome. You know, and I think that only comes from, if you have hubris and you've got, we've got everything solved and we know how to do everything. I don't think you can't have diversity of thought. You can't bring opinions back from customers who are going to say, I don't really understand what you're doing, or this isn't solve my problem. And you're not going to listen for and be empathetic to what the needs of your customers are, and the needs of your users are. And so I think that's probably one of the most critical things for us, is like, if you're willing to be humble, and willing to sort of audaciously try to go do something, you know, I think you can create an environment where people can thrive and do interesting things, but also don't feel like that if they make a mistake, or, you know, do something wrong in the path towards success, that they're going to be flushed out and eaten up.
This is awesome. I mean, you make me want to work for you. You make
good.
I mean,
we need more people. Come on, Peter.
Well, maybe we should talk about it after this. But man, I just love this idea of humility being one of your core cultural, if I can inject that word there, one of your core cultural values at Pinpoint. And you said it's the recognizing that you're going to do things that don't work, and you're going to be asking people to try things, and they might fail. This is something that I think that is given a lot of platitudes and a lot of, you know, lip service in the startup world and the VC world and the company world. But I know that this is true coming from your lips. I know this is 100% true, and that means a lot to me, Jeff, and I'm just going to say it there. Let me ask you another question, because on March 2nd, 2016, on a Medium article, you said that you wanted to do a better job at reading 6 books per year. So first question, are you doing it?
No, I'm actually
I'm
not.
holding you accountable.
You are holding me accountable. It's good. I'm actually consuming different, and this is not necessarily a good thing. So this is an honest thing where I'm consuming more content. My concern is that it's lower value content. So like, as a good example, I read a lot more blogs and Medium posts, and I do a lot more podcasts. I think podcasts actually have high value. So like, there's a good podcast I listen to pretty much every day called Software Engineering Daily. It's more of a technical podcast, but the guy who does it's named Jeff as well, so that's always a plus in my book. But you know, seriously, he's really, really super good, and he just kind of gets into like technical topics. But and so I learned, you know, and they're sort of the newest things that are happening in the world, and they're not always like geeky things. Sometimes they're just business-oriented discussions around startups or technologies and things like that. So I like that a lot. So So that's I would put that in the high value, high calorie sort of category. But I'm definitely spending a lot more time in probably lower value reading. And so I'm struggling a little bit with that. I'm struggling with finding, how do I find, what I do, it's weird. My wife loves it. When I go on vacation, I'll read 2 or 3 or 4 books. In fact, now, like, my life is, I want to go on vacations to read. Because I feel like that's the only time I can get sort of this uninterrupted time. So we went on, in June, we went on a cruise. It was terrible. So I'm not a big cruise person after having gone on my first cruise, I will admit. But one of the best things.
Did you go on the Disney cruise?
No, that I know, it was a Carnival cruise. Maybe Disney, I would heard. My kids, unfortunately, are too big to do the Disney thing. So, but what the best thing about it is, because it was not super fun as we thought it would be, I was able to lay on deck literally with a book. And I read several books, and I read like Play Bigger, which is a really great startup book. If you haven't read that, How to Create a Category. It's a really awesome dude that wrote it, or several people actually wrote it. But and I could just pound through these things. So now I'm getting old enough where my life is like, I want to go on a vacation so I can read several books. So I feel like only
really
time
awesome.
I can get uninterrupted time, it seems like. And I think this is a problem with society in general, was like, we've got all these micro sort of consumption things, and
I know.
that's good in some ways, but I think the value of like having like a 300-page book that you can just sort of devour in a day or something like that there's nothing like that.
I think
miss that.
oh yeah. And I think there is a lack of depth often to the snippets, clearly.
That's right.
The snippets. But I'll continue on here. You said, I want to read a minimum of 6 books a year. And you are quoted here saying that there's one book every startup CEO should read. Do you remember that? If you don't, I'll give it to you here. It says,
tell me which one it was.
From Impossible to Inevitable, Aaron Ross and Jason Lemkin.
Oh yeah, Jason's a great guy. He's the SaaStr guy. If you don't know who Jason is, he's a great.
I know who
he's
he
a
is.
great. It's another great book.
And I love the fact that you highlighted some of the great points of this book, From Impossible to Inevitable, around nailing your niche, right? Doubling your deal size, or asking for more money. There are no overnight successes, but there's one area that I really want to pinpoint on, no pun intended, is a section that you really highlighted on and kind of divulged a little bit more, in that it will always take longer than you want. And I'm going to give you a quote here. You said, it'll take years longer than you want. Don't quit too soon, or the year of hell to discourage you. Be prepared to do the time. And you said this, and I want to ask you what this is all about. You said, our year of hell was between March 2015 and March 2014 and March 2015 at Appcelerator. After many years of aggressive growth and lots of success, we hit a wall. Now, for everyone that's listening out there, tell us just a little bit, what was that wall and how did you break through it? Because clearly, moving into the 2016s, it turned out pretty well. So what changed?
Yeah. This is pretty normal, actually. So a lot of people will talk about this, but just to give you a little inside ball, and the people who listen, we were going through just a tremendous amount of growth in our company. We'd raised a lot of money. We'd raised in the end, we raised $100 million roughly. And so we were in that sort of middle, we just raised a really large big round, like $30 million. And there was a ton of pressure because we'd been growing. The company had gotten pretty decent size, the sales team, all the things that you kind of go through in these big
are all
pivot
good.
points.
These are all good things too.
All good things, all amazing things. And you think everything's going great, right? We just raised a ton of money. We were bringing on some new people into our management team that had a ton more experience than we ever had, especially on the sales and go-to-market side. And we just compromised our values in some way, with some of these hires. The hires themselves were phenomenal people. So this was not an individual person, individual situation. It's just, we got into this notion of, we just need to hire fast. And we compromised on just how we hired some of the wrong people. And it happens. And we had a lot of cash, so we were willing to sort of make mistakes, but in a high burn sort of scenario. We took on too much, too fast, too soon. We should have gotten pieces of the organization working as we were scaling before we started. We started sort of this multi-department front where like every department had major things that it was making changes, the leadership, the way we went to market, sort of the people that we'd hired, et cetera. And literally I found myself where everything was broken. I mean, literally there was a problem everywhere. And like I said, not one thing was a problem per se. It wasn't like, oh, just, get rid of this person or stop doing this thing or don't do that investment. It was just literally about 100 small problems that all, of course, bubbled up at once.
And this can be
because we had spread our resources really thin.
Yeah.
Sorry.
No, this can be expected through hyper growth. When there's hyper growth,
it's like I said, a lot of people talk about this. I mean, it's not an unexpected thing. And sort of as part of this, we were also doing a little bit of a business model pivot. Not a pivot in the maybe traditional sense that people think of a pivot, but like we were adding a new sort of enterprise sales motion and hiring a bunch of really expensive enterprise sales. We'd been more of an inside, kind of a lower cost acquisition model, and we were pivoting to a more of a larger enterprise as we were growing up. We'd hired a ton of people in the field. And it was just a lot of changes structurally that were all happening at once. And so we weren't able to put our wood behind, one or two arrows. We just sort of spread all of our calories across a lot of different things. And it killed us. It almost killed us. It didn't kill us, but it almost ran us off the road. And our revenue suffered.
So let me take that immediately, that this experience, obviously still relatively fresh 3 years ago or so. Yep. And let's plop that into where you are now with Pinpoint. You guys have completed your Series A. You guys are relatively flush with cash. I mean, you're in a relatively similar position in terms of the pre-position of let's spend money and let's grow. And so what have you done differently in this startup from what you've experienced and learned from Appcelerator back in 14, 15, and 16?
Yeah, that's a good question. And one that we although we've done a lot of things differently, it's always hard to know if you've done the right things or if you've over-pivoted. So
that's because you guys are humble and you don't know what the hell you're doing most of the time.
That's right. That's true. So we've probably, in some ways we maybe have over-rotated, if you will, but we've really tried to sort of go slower. We don't have a full-blown sales team yet. I mean, we while we have a lot of cash still in the bank, we're going slow with customers. We're going slower with the product than we probably would like it. We've got way more demand than we can fulfill. And certainly investors don't like that. Yeah, it's good problems, but nonetheless, it's still problems, right?
Are investors telling you spend more money faster?
Yeah, it's like maybe not spend more money, but certainly try to go faster and try to like add, scale faster and whatever. And so I think honestly, I think we maybe have over-rotated and spent too much time and too many things, but part of that is sort of the scar tissue of like, how do we really try to make sure that we don't run out of cash? How do we make sure that, that we try to build things before we scale, so we're not prematurely scaling in certain areas? It's okay, like there's always this rush in startups, right, where you're constantly running sort of the sprint. And we're sort of saying, this is a marathon, and we're still, and that's a trite statement that everybody says, but generally it's not really ever lived that way. You sort of constantly run these sort of sprints that really ultimately turn into marathons, and you're dead in the end. And so we try to sort of say, if it takes 6 more months, it doesn't really matter. As long as we do all the right things long-term, and as long as we don't run out of money, and as long as we're sort of, not letting the market pass us by, it doesn't really matter. Because back to the earlier point, startups always take longer than you think. I mean, we thought, 2 years ago, we'd be in a different spot than we are today. And that was sort of unrealistic. And we've done it many times. So
I think this is
kind of
awesome.
where we're at.
I think it's great that you've taken from some of you use the term scar tissue, but I think that's apropos for sure, that you got scar tissue, you learn from that, and that you're taking it slower now. And I know 100% that you are, as a leader, are communicating this within your company as a leader, and saying this is one of our values, is that we had scar tissue, we learned from it, and we want to make sure that we don't want to run out of money. We don't want to throw money at things and just scale and become fractal real quick, and then have problems all over the place. But it is a great segue into a question that you posited to the ether on Twitter on December 19th, 2015. So we're going even farther back. And no one answered this question. So I'm wondering if you can now answer this question for yourself. On December 19th, 2015, you said, quote, "The challenge we face in the new economy is how do organizations and people move to a whole new level of meaningful, productive, and innovative contribution and a higher level of consciousness." First off, what the hell? That is some really amazing, like philosophically deep stuff, Jeff. But I'm going to repeat it. The challenge we face in the new economy is how do organizations and people move to a whole new level of meaningful, productive, innovative contribution and higher level of consciousness? Do you have the answer?
I don't know if I have the answer, but I've thought a lot about it. I mean, I think a lot of people are starting to recognize sort of this, we call it lots of different things: work-life balance, social capital, conscious capitalism,
Conscious
there's all
capitalism,
kinds
yeah.
of sort of different sort of meanings of it. And I do think there's this sort of, I mean, I'm a diehard capitalist, but I do feel like, capitalism has been the thing that sort of has brought out, many wonderful things in the world. And taken a lot of people out of poverty, created a lot of amazing, sort of wealth for a lot of people. And so I do feel like, and sort of the negative side sometimes is, some bad things have happened because of it, but given sort of that sort of mechanism. So at the end of the day, I do feel like we can sort of thread the needle between how do we create a positive society and a positive set of changes that everybody wins, if you will. Maybe not everybody, because there's always going to be a winner and a loser, but at least inside of a company, like how do you create an environment where people feel like they're getting personal, meaningful opportunity and contribution and are part of something larger than themselves. And it's not just always about a paycheck or, some, sort of profit motive. I think there's a way to sort of do both. I'm not sure I have the answer, and I don't know if anybody really ultimately does, because I think it's sort of companies and sort of mission specific.
Right.
I think back to like the way I think about it is if you've got a mission and a vision, you've got clear values, you'll attract the people that ultimately care a lot about those same things, and they will get meaningful. And if you create a culture where people sort of are able to sort of create value and then get rewarded for that value, and the rewards aren't always financial. Often there are other things, right?
Right.
It could be career. It could be the kind of type of work I work on. It could be the flexibility of my schedule because I have kids and I want to be able to spend time with my kids in working hours. Whatever those things are, I think if you create and the way you do that is if you have really good vision and mission and you know where you're going, and then you can sort of align around that.
Love it. I love it. And correct me if I'm wrong here, Jeff, but I might be stretching the line a little bit too much here, but I would go as far as to say that Pinpoint really is an outpouring of this idea of that actionable analytics, right, for the enterprise, helping engineers, helping management make informed decisions, helping engineers understand the value that they create from a code level and all the stuff that we could talk about. But am I taking it too far, or is this?
No, you're not. Actually, I think you are. I mean, we've really tried to say, like, you're sort of, if you think about it in sort of two halves, sort of the engineering half, engineering, it's hard for engineering to advocate to stakeholders, to communicate value, to help them understand sort of technical or business trade-offs that need to be made, like technical debt is a good example, or investments in new sort of infrastructure that necessarily it's not obvious how that generates new revenue or helps you sort of achieve some sort of roadmap item. And so that's sort of the engineering is a black box, right? And so how do sort of people who are highly compensated, but also often it's an opaque thing for a lot of people in the business. And on the flip side, the vice versa, on the flip side, it's also that same way to business people. I've invested all this money in all these people. We've done all these things to create sort of an environment.
How do I know if they're creating value?
Yeah. How I know that we're, paying a lot of money, but we miss every deadline. I know they're doing the creative things. I know once they get it right, it's sort of magical, but it's just sort of mysterious black box. And so how do you help both sides? One, have a language. How do you have a communication mechanism so that people can understand the business value and sort of the trade-offs and sort of the advocacy that needs to happen from the engineering side? And that's sort of, and then to at a personal level, ultimately, I'm a developer. I talk to lots of developers. I've been working with developers pretty much my whole career. It's like, how do I advocate, for all the things that I've done and how I've helped the company? So that's sort of the bigger notion of Pinpoint and the bigger vision of Pinpoint. Now, there's a lot that has to happen in the inside of that to sort of make that work. But absolutely, it's like, how do you create a rewarding environment? How do people that are creative get, sort of recognized for all the amazing things that they've done?
I'm so glad that our conversation moved toward that trajectory, because that's what I hoped it would go, is that you, by answering this question, how do organizations and people move to a whole new level of meaningful, productive, innovative contribution? I feel like in 2015, in December 2015, you were kind of staking your claim to the universe, talking to the divine matrix and saying, hey, this is a question that I need answered. Nobody answered it, by the way. No one retweeted it or replied, but you ended up living out that but we agree here. You end up living that out in creating this heart wondering of, hey, can we create a different world where there is a lot of meaningful work and people are reading, getting to higher levels of understanding, and this cry maybe of your heart to the Twitterverse ended up becoming the application that you're building today in Pinpoint. I think it's pretty good.
Yeah.
So let's roll it out here. Final question. Thanks so much, Jeff. This has been a blessing and a life-giving conversation to me. Here's our final question to lead us out. On October 14th, 2011 on Instagram. Oh, we're going way back. I'm going to ask you a question. What's the weirdest question you have ever asked Siri? What's the
Well, I don't use Siri, so that's probably
okay,
that's probably a hard one to answer. It's funny that I got in a rental car last week when I was traveling, and it forced me to for CarPlay now. It forced me to turn Siri on. So I've turned Siri on literally just so I could use CarPlay in this rental car, because it was this old antiquated car that didn't have like a good thing. So I actually do have Siri on now. So maybe I should ask it a question.
You should ask her a question.
I've never asked it a question.
You did. You did back in October 14, 2011. You asked this question, and I have it screenshot.
Okay, tell me what it is. Tell me what it is.
You asked Siri, "What are you wearing?" And Siri responded back. She said, "You have the wrong personal assistant, Jeff."
That's awesome. That's a good one. Well, maybe I turned it off because it wasn't the answer I wanted to hear. I don't know.
I think you might be looking for and digging for the wrong answers there.
That's probably true. That's probably true.
Thanks so much, Jeff, for joining the show. Tell everyone out there where we can find more information about you and what you're working on. We'll give you the floor.
Well, for me, I live at JHAYNIE on Twitter and just about everything else. JHAYNIE. So I don't do social media as much as I did probably several years ago, because I've gotten burnt out a little bit by it, like a lot of people. But Pinpoint is yeah, exactly. Pinpoint's pretty easy. Pinpoint.com. So love, I'm easy to get in touch with. Love to help entrepreneurs. Love to help other people. So I'm happy to help here.
Awesome. Well, thanks so much, Jeff, for joining the show, and hopefully we'll have you on again. Thanks again, guys. Everyone out there, have a great one.
See ya.
Wow, guys. I love this type of work. It was so awesome to talk to Jeff HAYNIE from pinpoint.com about his experiences as a founder and learning the venture capital world. I can tell you from my experience that I learned venture capital online. I learned it through reading. I learned it through my own various experiences, but never through the founder of being a founder, coming up with an idea and having someone say, hey, we're going to give you money. We're going to get you funded here. And so this was certainly an experience that I couldn't have because I was too young, but something that Jeff had back in the 90s, the pre-dot-com boom and bust world of drinking from a fire hose and learning about venture capital, learning about the ins and outs of it, and obviously being a founder/engineer, really taking on all of that and creating some really great companies. First and foremost, Appcelerator, and the one that he's working on, Pinpoint, right now. There are a lot of great parts of our conversation that I thoroughly enjoyed. One that I have to talk about is this idea of values. Now, I gave the caveat. I gave the notification that, hey, yes, I have invested in Pinpoint and as an angel investor, and Jeff HAYNIE has invested in my companies in the past. Currently invested in one of my companies right now. So with that caveat gone, but I love this idea of values and something that Jeff's coaching Jeff's coaching in our companies, in our leadership it has been around these values and principles, that we should be guided by our values, guided by our principles, not guided by anything else. Because those values are what you create your culture out of. Those values are what you create your entire world, that all the people that are going to be part of your company are going to be part of. And you must lead that. It's a crazy responsibility. It's a crazy burden, as you could probably see from the way that Jeff talked about it, how passionate and how important it really was to him. But I think with that opportunity to create the culture, to establish those values, that what he called a belief system of the founders, like what you do are your values. And I hope that you were able to see that Jeff HAYNIE really is a guy who's value-based, principle-based, and really struggles and wrestles with ensuring that he leads his company, leads what he's doing in the people that are working for him in a value-based way. It's just like I couldn't have got a better answer out of Jeff regarding this. Now, one thing I also liked when Jeff talked about passionate people working towards a common goal create magic, and that the magic is people rallying around the leader who has this vision, this mission, right? These values that they've so clearly identified and communicated. That is a leader that you want to get behind. That is an individual that you want to follow. That is an individual that you want to be led by and build great products for. And I'm also really glad. I'm really glad that we got to answer his December 19, 2015 tweet about the challenge we face in the new economy is how do organizations and people move to a whole new level of meaningful, productive, innovative contribution and a higher level of consciousness? Well, the answer to Jeff HAYNIE was build it. Build it. And they're building it with PINPOINT actionable analytics for the enterprise, allowing developers, engineers, and management to work together to ensure that all are creating value and having a common language so that they can communicate between each other. Now, this is something as a consultant I know that I struggled with, working with management and engineering, to help them play together, help them work together so that they could communicate and build the right products and services that the company, clients, customers, and the world needs. I hope you guys have an awesome opportunity to check out PINPOINT, pinpoint.com, as well as other things that Jeff is involved in. If you want more information about Jeff HAYNIE and PINPOINT and everything that's going on with the VC Hunting podcast, make sure that you find your way over to vchunting.com/Jeff HAYNIE. You'll find that information to be very powerful and useful. You should retweet some of this stuff, Instagram some of this stuff. I'm having a lot of fun doing this, guys. I hope you are having a lot of fun and listening to these awesome conversations. Let us know in the comments below if there's anything else that we need to do or how to improve all of this. You guys are awesome, and I'll see you next time.